I say Happy New Year to all of my people here. I say Happy New Year to everyone out there. So, Happy New Year it is. Hmm. Well, let us let us call ourselves to the time awareness. Yes, it is Happy New Year. But my people, I want us to do something for ourselves. Let us assume that there's no time because to me, there's no time actually is not real. So let us say there's no time. We don't ban ourselves by time. You will not be happy thinking of in the next 2 years. By next year, I will be do this. By tomorrow, I will do this. Because you don't have actual something to say by next year, by next year, by next month, by next minute, whatever. You will be doing everything. You'll be thinking everything. You'll be doing everything as its moment because you don't actually have thing to ban by say, okay, by tomorrow. It's not exist. So that is time awareness. There's no time. So back to Happy New Year, as it's called, it's Happy New Year 2024. What I'm saying it says is that there's no time. Right now, for everything you want to do, for every plan you have, make sure you have a plain goal decision, what you really want, and set your plan. After plan, then apply your discipline. That three thing, you have a plan, a goal, then and you have a plan to get that goal and the discipline to back it up. That is all. So forget about time, my friend. Forget about time. Okay, back to business. As a forex trader, for every beginner and for every intermediary or someone that's been struggling with being profitable, I believe this is your time. So before we get to chat, if you remember that our last video I dropped last year was about trade like a boss, something like that. Yes, it's not that nobody can trade like a boss, but if you believe that you can trade like a boss, then you will trade like a boss. So what I want to drive from that is that video. I hope you do not forget anything about it. If you forget, we can just try to bring ourselves back to the memory. What the video was about: advanced market structure, advanced market structure. That just simple as that. What I mean by that is that where market is let's say market is bullish here now. So this I call advanced market structure for us. This is the low that actually change character or break structure above around here. So I'm doing this put to bring back our memory about what we watch so that we can know that it's not waste. Because here I'm not trying to give you different things so that you'll be getting you confused. No. All I'm trying to do is to make the same system to be easier. You understand me? Like a wise man said, he said, do one thing 1,000 times. It's better than doing it's better than doing 1,000 things in the 5,000 times. So one thing in the 1,000 times, you become an expert. 1,000 things in the 5,000 times, you become confused. So let us get to it about the market, advanced market structure. This is a low that break structure or change character here, whatever it is. We know that it changed from other side to other side, or it broke up the normal trend before. So you want to buy from here. If market got here, that's it. So what I was saying is that when market break down here, you get to sell here in the hope for you to look for buy. So here is a inducement for this for the buy movement, but it's a change of character for selling. So by looking for selling there, if market got to this area, sorry about that, you can possibly buy here because of it's a last low that break structure. So if you believe that this trend is still continue, that you call market structure. But let's say Let's say market did not get to that your position you want to buy from, and they made another change of character here. Of course, you can buy here and target the whole high because of the bullish, and it's vice versa. Instead of you to wait for here because of this change of character, you will eventually buy the market because they are in bullish movement. So you got the sell here because it's an inducement for the buy, but it's for the change of character for selling. So the whole thing I'm talking about, all these advanced market structure things that I want you to fetch out, is just like you are reading a book. You don't have to read blah 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 blah, read everything. Just picking out, and find the meaning, and you understand the whole concept of the book. So for you to understand this whole concept of this market structure thing that we did last time, is that you already know where the market is going. Market is bullish, so we are only trading change of character. That is what we are actually trading: change of character, change of character. So I'll just give one more example based that happened this week, so to know that it doesn't waste. But based on what I want to show you today, it will just make it more advanced. Today, topic we want to talk about is advanced, like this advanced market structure. I call that one advanced liquidity algorithm. So let us put example of, so this is Tuesday, the beginning of okay, last week Thursday, Friday, and this is beginning of this week, which is Tuesday. So market is bearish, right? To me, from the way I see it, there's no change of character along this road. This is the last break of structure that happens. Forget about this one. There's no change of character here, like inducement or whatever we call it, that can make say market is break structure here. It's just another pullback. So this is the extreme that extreme. So this is selling and not buy, right? I said it's vice versa, both side. So that's the high. So what happened is that what I'm telling you about is now we are trading advanced market structure. This is the high that break structure last year, and we want to sell market, right? So this is where market is right now, which is on okay Friday. I don't want to talk about last week, but if I want to talk about it because of this concept of change of character, so you want to looking for sell here, and this place you didn't see any change of character here. It's just a pullback, another low, another pullback, low. So you now had a change of character here, or I think yeah, the change of character here. So looking for buy here, just like the way we analyze the structure. We want to sell, but inducement was taken, change of character happened, looking for buy. So until you see another change of character before you will continue, you will consider to go back to the direction of the market. Either you see change of character again, or market actually come to your the extreme that breaks structure last. So just like our draw here, right here. So this is the last place that break structure above. This is where change of character happen. We got the sell against the buy, right? So instead of what to wait for here, market change character, that's why we buy. But if market do not change character there, eventually when they get here, we should just look for buy opportunity. It doesn't mean you're going to write. Just follow. That is what we do, right? That is advanced market structure that I told you. Market, this is the last break of structure that I see. Change of character happens here. You got your buy. Market go to the extreme, is selling. If at all you are not confident to sell, there's a change of character now, looking for another sell, target the low. That is a example of market structure, advanced market structure, that the last video I drew up, and you guys watch it, and I believe you guys love it. So today I will not give anything less than superb. Let us now go back to today's topic. Today's topic is about advanced liquidity algorithm. So when we talk about liquidity algorithm, in higher time frame, what market do is market take liquidity and market feed fair value gap. That is their job, to feed the fair value gap and to take liquidity. Market don't really have specific way to. We are just spread them based on previous data, blah blah blah. So, and trust me, that is why we have to be very careful applying risk reward ratio, apply risk management, everything. because it's a probability game. Every time you enter trade, you don't know, maybe it's part of winning or the part of a loss. If there's a way we can know that this trade is going to be the part of our winning, of course, why? We could just double the lot, put up everything there, but we don't know if it's going to be the lost part or the winning part. So that is the bad part, the very, very dangerous way of trading. Nothing is guaranteed. So today, I'm talking about advanced liquidity algorithm. What I mean is, this is 4 hour. 4 hour is not too high, it's not too low for that. What I mean is that when market is in bearish, okay, let's just start from here. I just want to illustrate from here before we do whatever. So market has been selling here. They are selling to do what? To take all the liquidity that was rested here. Every pullback, every equal low, double top, whatever, double low that is happening here, that is what they are chasing. That is what is okay. People are taking, they are here to take all the money. That is why they're selling, to take all the buy side, the sell side liquidity that was rested where market was going on before. And that is what they came back to do. And when do you expecting for them to change? Like now, okay, maybe they took enough liquidity on the sell side, they want to change liquidity on the buy side now, because as they're coming side taking all this liquidity, they're actually creating another liquidity on this side. That is what they do. So when do you think they took enough liquidity from this side by them to change the other side? It's when you have a market structure shift, like change of character, stuff like this. So when we have that kind of stuff, change of character, all your job now is to be finding, you believe now market is trying to be buying up to do what? To take all this liquidity that was rested as well. Every high, every equal high, three top, whatever it is, if it's pull out, it's a pullback, whatever. So that is their job to do now. All you have to do is just be finding your key level on a 4 hour, your key level that market reverse, you join the movement again, market reverse, you join the movement again, market reverse, until you actually see another change of character. You understand me? So until you actually change of character, and we see it here, you've been selling until the change character above, buying. Sort happens here, the stock, you got little sell, the breakup. You cannot guarantee how long they will move. That one will be up to the higher time frame, like weekly. So maybe I will drop the video about how to find a weekly bias very soon. Maybe next video, how to find a weekly bias down to daily. So that one will give you the insight of, okay, whatever you are doing here, you have the higher time frame insight. It will give you very passive way. So now, we just want to do this last week that happened. So means we want to use liquidity algorithm to trade this last week, to do the example for you guys to understand how liquidity algorithm work. So what I mean is that wherever they have been buying, they've been buying before, we've been following them based on finding our key level to join. So what we see here was a market structure shift with a change of character from bullish, the way we have been, it is happening before. So that means you and I are be looking for sell opportunity now, right? And we'll be targeting every liquidity that was rested below. That is our job. So every liquidity is in trouble now. Every low, every high is in trouble. The market is coming to take all this liquidity aside. Want the market shock. That is what you want to trade towards. You and I. We don't know, maybe they will get there, but that is until another thing happen. But right now, this is where we are targeting all this liquidity area. So change of character means you are looking for short. So like I said, all we have to do is just find our key level on 4 hour they can reverse to. We are not expecting any change of character now. You understand me? Let's say we are expecting now, we'll be careful, maybe based on another higher time frame, but this is 4 hour. Find your key level where they can come to. When I'm talking about key level, it's just like I said, find your entry for your entry on lower time frame, the way we enter a lower time frame. What do we use on lower time frame from entry? We use like 14. Yes, 14. We use like one scope, that is SCOB, single candle order block. We use fair value gap, we use flip, and we use breaker block. So that four things, we use them for entry on the way we enter market on lower time frame. It's just like you are looking for the same thing on higher time frame. So that's why I just call them key level. So if you see this area now, we have this fair value gap, left this curve, we have this flip. So before they can just pass through this flip, it can be a liquidity. They can just get there and sell down little and break it above, but it's a zone because it took the liquidity before market started riding down there. So it's a level where we can say if market got there, I can be looking for selling opportunity. See, after this change of character, there's a way to trade all this. Of course, there's a way to trade because as market is taking all this sell liquidity, there will be the one that will push it back up for reverse before they continue. Yes, that one is another thing I will do that video about entirely. I don't want to miss you guys together now. Just to focus on the direction of where market is chasing liquidity now is what we are doing. So when we have a place like this, a key level, all you have to do is what? Wait for market to reverse. It means all this has been happening like last week. This is so the beginning of this week. This is Tuesday. Beginning of this week, Tuesday, right here. So when market opens here, you only have here as your key level. If market reverse, you want to look for short. And what do we do now? You don't able to short from here. No, go from here now. You can go to 15 minutes or any lower time frame in your favor that you know you can handle. If you can handle 5 minutes noise, if you can handle 3 minutes, whatever. If it's 1 hour based on your. So this is the level that we mark. That if market got here, we want to be looking for short. It's very, very perfect. So people can say that they want to be short from the 50% area of that movement of that candle. If market get to 50% area, like when market tap here, they just enter market here, they can execute from here and put their stop loss about here. Forget about stop loss. Put having a very rational stop loss like my stop loss 20 pips, 30 pips. That is nonsense. It depends on the market. This eye is where market take this eye. You can sweep it and come back. Yeah, that is possible. But if market value this eye, you know that maybe you have to wait for another up level, or maybe market want to change character. You just have to wait. So put your stop loss here. It doesn't matter what they get you. Target to 1:3. Secure your trade. Take half your trade. So when you have your trade, find your way to be in market here. If you can't do that, there's another confluence. Maybe you're afraid. Then you see change of character towards down where market tap into that place. So what are we doing? Using the fair value or use anywhere to look for sell here. Targeting this low first. By this targeting this low, you already have your 1:3. You can take or even 1:4 for this moment. Take like three out, secure the rest. You know the way market is really going. So if you have a way to hold trade, possibly fine. So all you can do is go to 4 hour and be see how it's working out. Very, 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 very. So you trade that way, it works out. It won't be like that all the time, but you have to accept that if you keep doing it, keep doing it, keep doing it, most of the time you will so much good at it. So I find an entry here. This is the TP and this low, this is where the market starts reversing. This have to be your way to find your TP first. And all this low, they are in trouble, as we all know. So right now, again, until market break this place, there's nothing you can be looking for another sell opportunity if you have the way to look for it. Of course, I have a way to look for it, but I just want to keep it simple. This is the first trade. Until market take this low, now it's a liquidity sweep first. But when market break it finally, was around this year when market break it finally. So now, so guys, sorry for that. When we find our key level here, when market got there, we see change of character, we go for short. The first target area was the low that started the reverse to that area was our very steepy before we be chasing all these sales liquidity that we are actually chasing. So of course the first one went out, it went very well. Your TP was here, maybe you take everything out or you still hold based on the liquidity that was still rested below. So now when market make all this move, we still have all this liquidity. Market has take this place, they are wasted now. You don't have anything to mark about those places. So now we are targeting market is already here. So that one is also sweep. So we this one hasn't because we are looking for. So right now, if I want to find another key level, I said something. I said the key level is on that area will be either flip, breaker block, fair value gap, or single candle order block. So to me, we find this fair value gap, very early one, and also this high, is the one that caused the traffic where the breakdown was happened. There was a lot of consolidation before the drop market, and this area it has been, if you drag it above, it has been a very area that is the supporting market for a while, supporting here, breakout also. So that is why this fair value gap also, if market got there, it's not that we're going to short straight. I'm just finding an area that can push market down towards our liquidity area. So when I have this fair value gap based on it form a very strong area now that market breakdown. So and I have this level also. So me in those places I have to looking for short opportunity. Like last one we go to 15 minutes, right? So 15 minutes is all about, remember how we got the other one. If you can go there, when market get there, either we short or we wait for change of character to look for short. So when market get here also, if you're not that confident to selling, it's just about waiting for the change of character as well, which happens right here. When change of character happens right there, so then find your entry, put your stop loss above here, blah blah blah. That is how they target this the reverse. Like I said, it always be the place where market start the reverse. Before there, you already got your 1:3, get it out, maybe you secure some rest until here. Just depend on how much you are looking for. So depend how your stomach can hold it for market to breathe. Yes. So what I mean we have this area where my change of character happen, we got sell again. So all this one has been taking also the low that caused the reverse, and this liquidity also taken. So when I was taking right now, if I to be looking for any key area looking for the market can get back to for selling right now, it will be in actually this area. So maybe if I want to be looking for, I can right now because of this movement, this candle that closed, I can consider some area here as liquidity. Or I just hold on before now do anything. Doesn't mean we should arbitrate all area if I don't have a very good movement. Not this kind of area, but eventually we still have some high up there, and that one is working now. But to me, I don't say it's going to hold. Maybe this is a hop here and market bull down there. So finally they can go up and change character. So we can be looking for buy, or market can still be selling again if change of character did not happen. Because till now there's no change of character. Everything just a liquidity sweep to me. So that is about the liquidity aggregating for the last week that just happened. And that is how it's been happening before. When market change character, they are chasing this sell side liquidity, change character above, chasing this buy side liquidity, change character, chasing this sell side liquidity. If change character now, they'll be chasing the buy side liquidity, and we can follow them. It's very, very pretty simple. When they are selling down, just know where your market change character, know your value pullback. That is why you have to watch the video about my value pullback. As you can see, when the change character down up here, just market come to level, buy up, come to some fair value gap, or the latest here again, a breaker block. Yes, there's a breaker block there. They come back to buy up. All this see here, maybe it now become maybe resistance area being on here. But when the market ready to go back up, you see another confirmation. They go back up, you break out again, come back to this breaker block, break out here, come back to the breaker block, go up, you break out here, you have to come back to this fair value gap, these two fair value gap, now become a support, whatever, until we actually see change of character and so on and so forth. So, and wherever you're trading, know what you're targeting. So, know what you're targeting and keep it simple.